Hello and welcome to a quick video. Its purpose is to prepare you for the upcoming CPI data, the considerations, what I see unfolding, and most importantly, what the pre-market action is telling us. This will give more color to the article already published. So, you know pretty much my site. Welcome and make sure that you are subscribed on the free mailing newsletter at least. Bringing you again this US dollar chart. We had seen in the last 24 hours US dollar moving higher and yields are not exactly retreating, which is sending a message as to what kind of rate cut odds considerations markets are betting on. And we are seeing it in the second bullet point, which means that the interest rate sensitive sectors are moving down, and equities bulls certainly don't like real estate leading lower, and certain risk ratios that I'm using, such as discretionaries to staples, moving more towards the more in favor of staples. Gold and silver are since Monday's call going higher. It was so clear based on the China macro shift. The same applied as well to oil, and its upswing of late can be seen as well as part of hedging against the slightly higher than expected inflation figure just ahead. This is being countered by risk-on positioning within cryptos and MicroStrategy. So let's see about the staying power. But as I had been publishing yesterday's premium stock market chart and analysis with the 6,555 key support in the December contract, we had been seeing it very thoroughly tested, and prices dipping lower and not exactly recovering. And as well, the Russell 2000 retreated from the promising upswing during yesterday's regular session. So what would be the next pit stop for ES? That would be the low 6,030s as the next support. But if we get either a hot figure or in the parts that are seeing the greatest improvement in economic activity, which is in the services-based US economy services PMI, running over 55 latest reading, that would put price pressure on equities, and that would be precisely what with the intraday reversal lower Russell 2000 had been hinting at, and the same applies as well to real estate, home builders, and so on as well. Not even industrials had caught a positive bid, overpowering the willingness to sell yesterday, even though the dollar moved higher. So the macro consideration that I'm having is improving PMIs and still positive and not at all recessionary set of economic surprises coming in, versus the as if extra stimulus granted to consumers' pockets via declining oil and gas prices. You see the headline and core inflation year on year expected, but it will be most important to see line by line how these components are doing and what kind of influence it's having on rate cut odds, specifically January and March, because December there would not be a stunner. Fed is going to cut by 25 points, but the real move would happen in January and March, reappraisals of rate cutting odds. So be ready for plenty of live commentary and good luck today. You know already the offering, and I would be most happy to welcome you on thorough, live, every single trading day commentaries fitting your trading style and offering you one-on-one support, chiefly delivered via messaging me on Telegram. Be aware as well of broadening of services within the intraday stock market channel that covers more of cryptos delivered by Ellen. You know my story pretty well. Make sure to start from the Twitter feed and my site and the obligatory disclaimer, and talk later soon.